All right, welcome to chapter 2. And I know that we're still on chapter 1, but a few things that we need to talk about in chapter 2 in order to get us ready to just start working on some problems. And that is what's included in gross income. So, gross income is your total income that you made this year. And according to the Internal Revenue Code, gross income includes income from whatever source derived. So income from wherever you could get it, including illegal dealings. It comes from everything. It's from your job, from interest on your bank account. Um, it can be, there are certain things in here that we're going to talk about. Awards, you win an award or you win a contest on a radio station. All of that's taxable. If you work on commission, that's taxable. Dividends, director's fees, I like this one, embezzled funds. So if you embezzle funds, or you wouldn't do that, but somebody else embezzled funds, um, quite often they don't, most of the time they're not going to claim that on their tax return. So once they get convicted of fraud, then the IRS is going to come after them and said, oh, you stole $3 million from your employer. I see that you never claimed that as taxable income. You owe us blah, blah, blah. That's kind of funny, I think. So, and awards that you might receive, gains from illegal activities. I think that somebody in our class made a comment um, in the discussion board about Fred that, or one of the discussions about that's how Al Capone was caught, and that's absolutely true. Al Capone killed lots and lots of people in his illegal activities, and he went to prison because of tax evasion. That was how they caught him. They were able to track his illegal monies through all of his accounting records. So I think that's really cool. Gambling. Gambling winnings are taxable. That's why if you win over, I think it's $400 or $600 playing on a lottery ticket, you have to go to the lottery commission to cash it in because they're going to tax it. Group term life insurance premiums paid by your employer for coverage over $50,000. So if it's under $50,000, the coverage that you have on your group term life insurance from your employer, if it's under $50,000, that's not taxable. But if it's over, it's the premiums that your employer pays on that insurance over $50,000. So the difference between the premium up to $50,000 and what they pay over $50,000 is what's going to be taxable. Most employers don't have life insurance on their employees anymore that's over $50,000 because this is kind of a hassle for them. Punitive damages. This means if you're in a lawsuit, let's say that no, we're not going to do this. Thinking way back to that woman who sued McDonald's because her coffee was too hot. For the money that she was paid to cover her doctor bills and all of that, not taxable. But her pain and suffering, those are the key terms, pain and suffering, that's taxable money. So they have to pay, after they pay their attorneys, they have to pay taxes on all of that money that they receive. Retirement pay, rewards, scholarships, royalties, some scholarships are, and we'll talk about that next week. Unemployment compensation, that's taxable. We're going to talk about that. That's in this chapter. Some things that are excluded from gross income: your group term life insurance premiums under $50,000. Gifts. Somebody gives you a gift that's not taxable to you. Health insurance proceeds, not taxable. Military allowance, including GI Bill benefits, not taxable. A minister's dwelling rental value is not taxable. Olympics medals and cash awards given to those athletes, not awards given to professional athletes, but to those amateur athletes. Then those are not taxable. Veterans benefits, welfare benefits, workers' compensation, that's an insurance. Inheritances, this is a big one. I was reading a book recently that it got really annoying because they kept talking about, well, I'm going to have to pay the inheritance taxes. And I just thought, okay, author, please do a little bit of research before you write this because that's not correct. Inheritances are not taxable. What's taxable is the value of the estate, and the estate pays estate taxes before it gives the money to the person, but the person does not personally pay income taxes on that. Let's see, I need to look at my little list here. Number 2, salaries and wages obviously are going to be taxable. I think that's about it for this section.